Welcome to Market Blaster, where we blow apart the stock market and put it back together so that it makes sense for you. I'm Forbes Markets editor John Dobis. This guy, it just doesn't get any easier for him. Jamie Dimon, JPMorgan's chief, down in Tampa for a shareholders conference, gets the FBI, gets the fuzz up in his grill. The FBI is investigating the trading unit at JPMorgan Chase. No real surprise. You can't really say that's going to be a huge thing on the stock. The stock did get whacked a little bit lower today. So did the overall market, by the way. JPMorgan Chase down about 1.9% down to what we got here last, 35.57. Still below 36 bucks if you want to get in on JPMorgan Chase, but there could be some bad times ahead, because what this does is it really alerts the Congress, gives them political capital to propose to pass a tougher Volcker rule, which would eliminate proprietary trading. In fact, conspiracy theorists, I hear you out there. You're already whispering that there must have been some deal made. Kind of like, hey, Jamie, take one for the team. You made out pretty well back in '08, didn't you? I can't prove you wrong, can I? But let's just say that there's no proof of anything like that. Although JPMorgan Chase does have a very big deposit base and a lot of branches around the country, and they probably do just fine as a retail bank. FOMC minutes from the last meeting came out on Wednesday, showing that there's a bias towards easing. Looking at the unemployment rate, these guys are and ladies, Janet Yellen here from San Francisco, are worried that the economy could be slowing. Recent data do not confirm that. You've got housing starts, you've got auto production, industrial production, and things like that. But the Fed does not want us to slip back into recessionary times. So could it be, is that Tupac? Of course, the old Rolling Stone Tupac Shakur cover. Somebody out there on the web did a parody. Yeah, the QE3, that's what we're looking for, yo. Looking for the 3, mama. So Ben, will he run thug monetary policy? Again, QE3 as it's known. Look at the federal funds rate. It's already in the cellar, basically, between a range of 0 and 0.25%, right about 0.13% now, down from 1982's high above 19%. Here is, and he's also expanded, Bernanke has, the size of the Federal Reserve's balance sheet, the assets and the liabilities. Here's 2008, it loaded up on mortgage-backed securities, agency debt, about 5 times what it was just 3.5 years ago. So, and also, you got to look at the fact here. Every time the Fed has done a quantitative easing, the first one was in 2009, the market took off. The second one was in 2010, the market took off. Then the Europeans stepped in, and there was Operation Twist, and the market took off. It seems like we are just surfing those waves of quantitative easing, and we're not really making anything in the economy that's going to bring us back. Well, and bonds. Look at this, 1.76% on the 10-year note. This is going back 3 years right here. So very low rates. Operation Twist has helped everything come down, including, and this is a good little segue into our next segment, 30-year fixed rate mortgages, now below 4%. Happy family there. They just got their home. They got a good rate too, I bet. Maybe even picked up a deal. There are more homes being started on than really most people expected. 2.8% increase in April from March. Things are looking a little bit better. Try to find a decent house out there on the market that doesn't smell like a dog. I challenge you. Home builder stocks have been rising since October. The home builder index, this is the 3-year chart right here. It was at 12 in October. We're at 22-ish, 21 right now. Some stocks lighting it up within it. Toll Brothers, they make the McMansions. They're quite proud of it. McMansions, Viva la McMansion, 27 bucks. Toll Brothers near a high. Where's the stock market problem with Toll Brothers? Check out your boy here, Meritage. They're a luxury builder out of Scottsdale, Arizona, ready to break out at $29.33. You've got Lennar. Lennar is just an average Miami-based builder of homes all across the country. 29 bucks also there. Similar chart pattern to Meritage. The mosaic that is Mark Zuckerberg. He'll be a lot richer of a mosaic, certainly on Friday, after the IPO of Facebook. Should you get in, or should you watch out? Well, keep this in mind. Goldman Sachs is one of the companies that has had a lot of Facebook. They bought into it 2 years ago, and they've decided to sell a lot more to the Muppets. That's right. Lloyd Blankfein Company are more than doubling the amount of stock that they were going to sell, from about 13.5 million to over 27 million shares in Facebook when it comes public, which it might do at a price of around $38 per share. So if you bought Facebook, you'd be going the opposite way of Lloyd Blankfein. Consider that. You may want to just get some bargains that are in the market right now. Look at Apple. You think it's rotting? I don't think it's going to rot forever, but it's down to 545 bucks. some air being let out of Apple, and they had a manic run from January 1st and through middle of April. Look at Google too. Google down to 630, picking up from 610. Google, and it's valued a lot more cheaply than Facebook. But there will be people that will jump in and buy it. You can be sure of that.